Hello guys, welcome back to ESENtaxa. Andrea Papito here. In this video, I'm going to talk to you about certain specific tax loopholes that you might find inside the Italian fiscal system, inside the Italian complex bureaucracy fiscal system and fiscal structure. So in this video, I want to show you how to turn this complex bureaucracy, this complex mixture of rules at your favor in order to pay almost zero taxes in certain cases and very, very low taxes in other cases. But let's see and let's explore the top 3 tax loophole that we can have in Italy as individual, as physical person. Okay, the first tax loophole, the number 1, is when you have this specific situation. So you relocate to Italy, you are a full-time employee, don't forget, full-time employee, and actually you earn not more than 30k, okay, now per year. In parallel, you can have a business activity, and this business activity can be opened with the forfait regime. So if you don't know what the forfait regime is, click above my head. I will put the link to the forfait regime video in which I will explain exactly all the details and the fiscal benefits about this specific regime. Now, if you're in this situation, so full-time employee with no more than 30k as income, as an employee income per year, you can open a parallel business with a forfait regime. And at the same time, if you open this VAT position with the business activity that falls under commercianti artigiani, this is the typology, the social security category that you should fall into. And I have also made another video in which I explain exactly all the type of social security categories in Italy, so you can exactly know how to understand exactly which category you fall into. Now, if you are in this category is actually, for example, used for e-commerce or simple, also selling and purchasing physical goods. So if you fall in this category, you don't pay the social security on the forfait regime. So that's the most important point. So because you already paid in your payslip, so you have the situation. So your social security is paid in your payslip, but is not need anymore in the forfait regime. And for example, the classical scenario could be: I'm an employee for a financial consultant company, plus I'm making drop shipping online. So I have opened my Italian VAT with e-commerce activity, has to fall in commercianti artigiani type, and the result is that you pay only 5% of taxes for the first 5 years, because this is how the forfait regime works, without paying any social security at the top of it. So imagine, only pay 5% of taxes up to the threshold of 65,000 euro per year, which is the threshold of the forfait regime. But if you remember, the forfait regime has this forfait cost, so you don't apply this 5% on your entire revenue, but the 5% after having removed the forfait cost that the state gives to you, which makes the effective fiscal effective tax rate of about only 2%, which is basically nothing. Now let's see the second loophole, which is a different subject in a different context, let's say, and this is when we need to play a little bit on flipping the properties in Italy. Now, the capital gain in selling properties, or simply flipping because you want to make a capital gain, it's 26%, unless you hold your home for 5 years. That's written in the stone, easy. This is how it works. But there is a trick, there is a loophole that allows you to don't pay either this 25% flat tax, also if you sell the home before 5 years, in case of course you have made a gain. So if you have your first home, if you purchase your home in Italy as a first home, and at the same time, this is very important, is also your primary residence, it means that you live there, so you have to purchase a property with the benefit of the first home category, first home rule, and which is basically means that you don't pay the property tax because you live there, and you set up your primary residence in this property. Then you can resell it without losing the first home benefit, also without paying the capital gain tax. So basically, there is a mechanism that tells you purchase a property discounted in terms of tax, when you purchase a property, so the registry tax, the cadastral tax, these kind of tax are discounted as a primary home as a prima casa benefit, but you can have also the way to resell this home before 5 years without paying anything in terms of capital gains, even though you resell it with a higher price. How do we do that? How do we achieve this specific? How do we tackle these things and get into this loophole? So in this way, we have two constraints to follow. The first one is to buy another home, and as the second one, because you want to resell it before 5 years, the first one, and the only way to do it is to repurchase, to purchase another first home. So you go to the notary and say, this is second home, it's still first home in terms of benefit, but with the promise of selling the previous one in 12 months. Okay, you have to do this. So you go to the notary, you say, look, I fed up on living in the house. That house was my primary home. I just want to change my prima casa, my first home. So the notary says, okay, no problem. We can purchase the second one with the same discounted benefit. You sell it, the previous one, within 12 months, not exceeding this time. And if you have lived in this home that you need to sell in 12 months, in that property for half of the time plus 1 day, is not a speculative operation, and is not taxed. So that's the trick. So if you prove, because in this way you are proving to the Italian state that this property, you had a problem in one property, it was your primary home, and you wanted to just switch another primary home because you don't feel like living there anymore, a good solution for you. This kind of operation is not speculative. The only way to prove it is that you have to prove to stay. That's very easy because you simply register your name in the communal residence in which you put the address of this prima casa, and you prove that you have been there, living there for half of the time plus 1 day from the moment of purchase up to the moment of sale. Okay, now let's see the third loophole. This is something that can be applied for different countries, not just for Italy, but here let's focus on Italy, on the Italian fiscal law. And we know that, and I also explained in another video how to acquire, how to lose the Italian fiscal residence. Okay, so you can only stay in no more than 183 days. If you pass this time, you will be considered Italian fiscal resident. And what does it mean as Italian fiscal resident? It means that you have to declare your worldwide income. Okay, now in this tax loophole, I'm going to explain you how to live in Italy for 1 year without being considered Italian fiscal resident. Really reading the law of the fiscal residency in a very smart way. So how do we do that? How do we obtain? Let's imagine if I want to stay in Italy just because I like it, but I don't want to live there for more than 1 year. There is a way to do it. In this situation, you will pay, in case you are earning some income in Italy, only the territorial taxes, because maybe you're an employee or because you're renting a home and a property, but you won't be considered taxable on your worldwide income, even though you are living in Italy for 1 year. The first things to do is to hack the 183 days rules across 2 fiscal years. Okay, and it's all about understand what does it mean fiscal years. So the fiscal year is actually the counting of the day. It's a counter that starts from January to December. If I move to Italy from the 3rd of July up to the 31st of December of that year, I don't pass 183 days. I'm on the limit, but I don't pass it. And then if I could keep staying in Italy also in January of the following years up to the 2nd of July, okay, the counting starts from scratch, starts from zero. Okay, because each fiscal year is independent. So you don't accumulate the days lived in a year with days of the following years. So moving to Italy in July allows you to stay up to the 1st or the end of June or still at the beginning of July without being considered fiscal resident. And let's imagine this can be very helpful in case you have a foreign company operating in another country and don't want to that Italy requalify this company as an Italian one because you are an administrator that lives in Italy. I hope you like these specific loopholes, very strange things that are navigating through the Italian complex bureaucracy, knowing exactly all the constraints that allows you to tackle a little bit this Italian thing. And I hope you like it. And if you have any questions, just don't hesitate to write to ESENtaxa@gmail.com. We can provide a consultation in case you need to plan your relocation to Italy, or if you want to have a tax simulation. Keep in mind that in the description below the video, you will have the link to the Italian Tax Academy, which has the only online platform with 5-hour course that talks about all the Italian fiscal system structure, this kind of loopholes, tax scenario, tax scheme. We also offering the package a tax simulation on your worldwide income if you move to Italy, so you can simulate before moving, before the relocation, to understand if the relocation makes sense for you. And still included in the package, 1-hour consultation with a former Italian tax agency inspector. And that's it for today. Don't forget to subscribe to this channel. Click also the notification bell. It's very important because you will get notified when new videos are coming out, and you basically will be always updated with new regulation, new fiscal law, and tax tips. See you at the next video.